at getting those things right.
All right, so we know all of this might be a little bit confusing. What exactly does this mean? Is it turning computing power into something like I mentioned, a regular old commodity like an oil or corn or wheat? Or is it something bigger, maybe something more risky or more profitable? Let's talk about it from all angles. With us to kick things off, Ed Yardeni here on set, Leslie Picker here on set, Christina Partsinevelos as well joining us. Leslie, I want to start with you because you've been covering Blue Owl and private credit and all these derivative products which have had a rocky 2026, I think would be a fair word. What is Wall Street's early reaction to what is being perceived as a new investment class here?
That's right. I think that's the right way to describe this. A lot of people have been kind of distracted by the headline figure of $500 billion. The real news here is that they're trying to create a product, a new investable asset class, an asset-backed finance class that, could be akin to things we see with aircraft leasing or accounts receivables. Those are all kind of established ABF. Yeah.
A farmer grows wheat, sells against the future crop to get the cash flow. This is Nvidia transferring some of its financing, correct me if I'm wrong, and maybe some of that risk to Wall Street and thus maybe to our audience, because ultimately I'm willing to bet these will become things that we can all just buy.
So here's a way to think about it is, when you go to purchase a car, think about the car like the chips, for example. You go there, you could pay cash for the car if you want to, or you can finance the car. And there's an established depreciation schedule for the car. You kind of know what the collateral will be. All that's been established. For chips and for compute, that hasn't been established. There are other parts of the AI infrastructure industry where you already have ABF established in data centers and other parts of the ecosystem. But in terms of chips and compute, that has not been established because the depreciation is a little wonky. People haven't necessarily wrapped their head around what future cash flows may look like. So what this does is it basically establishes the market. It establishes the product. It has these 6 financiers who will come in and say, if you want to finance chips, you don't have to go sell tens of billions of dollars in debt in order to pay for the AI infrastructure build out, in order to pay for these chips. We'll arrange a financing plan for you. I think the big question is going to be at what price? And this is something that Jonathan Gray of Blackstone alluded to, that in the beginning, you're going to maybe deal with some, cash flow negative counterparts. The pricing could be high, but over time, they expect that to come down and get more of the broader banks involved as well.
Ed, does any of this bother you?
Well, it's kind of early to really express a strong opinion on it. So far, I have the same reaction as the market, which is kind of ho-hum. It's first of all, it's a memorandum of understanding, and memorandums of understandings don't have a real good track record recently. So it's just, that's all it is. There was no specifics about how it's going to happen. I see an analogy with REITs, kind of for data centers. We have those already. And those are kind of financial platforms that invest in the data centers. And, those have gone up. They've gone down.
If you were, because you're widely followed, so let's say a retail investor said, and again, I don't know if this is exactly who this would market to, but said, there's an opportunity for me to pick up, I don't know what the number is, 8, 10, 12%, maybe less, this couple year, 2-3 year thing, asset-backed financing deal, and it's being backed by basically compute, some way, maybe rental income streams. Would you have any problem with that, or could that have a reasonable place in people's portfolios?
It could have a reasonable place, but I think it's going to be I don't think it's that you buy the asset class across the board. You're going to have to be pretty selective. And I think there's a little bit of hype so far in this whole thing. Calling it an asset class, it's a factory. It's a data factory. So I don't know that we're really creating anything radically new.